The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Thursday the 30th. It's the last day of April here, and we had the export sales out this morning. There were some surprises in that, but we're not going to get into that just yet. Let's turn over to the grain hedge trading platform to see where we closed off the day. Corn down 1 3/4, soybeans down 11 cents, and wheat in Chicago here trading down 7.5 cents on the day. Out this morning, we also got news that the Argentina Rosario Grain Exchange is increasing their soybean forecast to 60 million metric tons, up from 58.5 million metric tons in their previous estimate. They're also raising their corn forecast here to 25 million metric tons, up from 23 million metric tons in their previous forecast. So it just seems like that South American crop will not stop growing, and this is something that will most likely pressure both corn and soybeans here in the trade sessions to come. Let's talk a little bit about export sales here today. I think first of all, there were some surprises. Let's go right into wheat. This was a big surprise here. Cancellations of old crop sales here of 449,000 metric tons. Now last week's sales were 397.5 thousand metric tons. That was very positive here, but unfortunately unable to keep that pace going. Not only did we miss expectations, but we got pretty significant cancellations. And when you look at the cumulative export commitments here for wheat, you'll notice that this week we finally have fallen below that green line. Now that green line is the seasonally adjusted pace to meet USDA expectations. So for the first time here this entire marketing year, we've fallen below the seasonally adjusted pace to meet expectations here. That is not very positive. Right now we've booked about 23.2 million metric tons cumulatively throughout the year. We're expected to need to be about 23.5 million metric tons at this time of this year right now. So we have fallen behind the pace, and it's just not looking very good here for wheat. I think one of the reasons why we ended up trading lower, and we'll get into the technicals on the wheat situation here in a bit, but let's cover corn here. Corn had nice export sales. You'll notice 832,000 metric tons, in line with last week's over expectations for this week. So very positive here for corn. And when you look at the cumulative export sales pace, you'll notice we booked 40.3 million metric tons compared to the pace that's needed, which is 38.6. So all in all here, very positive export sales here for corn. We're ahead of pace needed to meet USDA expectations, but we're a little bit behind last year's pace. Nothing to be overly concerned about here for corn. Let's look at soybeans now. Soybeans, this is one of the big surprises as well, coming in with 433,000 metric tons. Analysts were expecting anywhere between 50 to 250,000 metric tons. We blew those expectations out of the water here. Last week we had 102. So when you look 102,000 metric tons. So when you look at these sort of export sales this late in the year, when South America is coming, their crop is coming out of the fields, it's being exported. You take all that into consideration, this is the time when it's supposed to be slow, and it just doesn't seem to be slowing down at the rate that we would expect. We're getting great sales here with 433,000 metric tons. So that was very positive. It helped pick up soybeans earlier on in the trade session. Another thing that's a kind of an interesting little story is that out of the Rosario Grain Exchange down in Argentina, the ports down there are seeming to be kind of hit a stopping point here, with the boats unable to navigate cargoes into port here. Not unable to, but they're actually on strike. So they're demanding higher wages, and it's pretty much clogging the ports and causing some serious logistics problems. All in all, if that keeps continuing, that very easily could push more corn and soybean sales onto the U.S. books. Let's talk a little bit about the wheat chart here because I think it's very relevant. Yesterday we talked about this. Yesterday we talked about that resistance level that was support, that area that was that 485 price level that held support back in the earlier part of March and then also again in the middle part of April. Once we broke through that about 4 days ago, we turned around and it looked like we were going to move back up, move back a little bit higher. Well, one of the things that we talked about is when you break through these, oftentimes these prices will come back and retest those levels. It's called a role reversal. An area that was support turns into resistance. That's exactly what we saw today, especially in combination with very poor export sales, and that's one of the reasons why we're trading sharply lower here for wheat. I'm a little bit concerned about wheat. I wouldn't be surprised if we trend a little bit lower here in the months to come. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about, please give the office a call. And if you haven't done so already, take a demo of the trading platform. The nice thing about it, you don't have to do a whole lot. Just go to grainhedge.com, go up into the 14-day free trial, click, put in your name, number. I'll get in touch with you, and I'll help you download that app. So when you're sitting in the cab of the tractor, you're sitting behind the planter there, bottom line, you'll be able to view the markets and you won't miss out on opportunities to hedge your crop. And that's just a great tool to have in your arsenal for this marketing year. Thanks a lot for tuning in. I'll see you here on Friday.